Good afternoon, traders. This is a live trade recap. I took 2 trades this morning right at the market open. I'm going to go over everything that happened. This is going to be a very important video because there's been something that has been kind of eating away at me that I've been contemplating for a long time now. And today it came into play once again, and I finally decided to kind of pull the trigger on this little addition to my plan. It's not something I would recommend you do if you're a brand new trader, but as you gain experience, as you prove yourself, it's something that you could think about. So I'm going to show you exactly what that is as well, but let's first go over my mid-cap screener. This is how I pick my stocks every day. I like to show you this because everyone wants to know, how do you get your stocks? So I go to the custom screener. This is all open on my laptop, by the way, when I'm trading. Right now you're looking at my desktop. I trade from my desktop and I screen from my laptop. So here's this my screeners, and then you click on these 3 little dots, click modify. This is my filter setup for my mid-cap screener. And then I organize the list by volume. That way I'm looking at the stocks with the highest volume. I give those favor, and whoops, it's in alphabetical order there. There we go. Now we're by volume. And look at today compared to yesterday. If you watch my live trade recap from yesterday, the screener was pretty much completely red, and now it's almost completely green. So what you're going to see at the beginning of the video is me just going down the list of these stocks. The ticker symbols are still pretty much the same. There's a few that I know are trading below the 200 MA, and I don't bother with those, like Wish. I know that just from memory that one's trading below the 200 MA, so I could just keep going, and some of these weren't on there. But you'll see, let's take a look at the video right now, and you can see this is right around the opening bell here. It's like 9:30 and 1 minute at this point. So TLRY was the first one that I put on the daily chart to check to see if it was below the 200 MA. And if it is, then I don't look for trades. So now I go to the next stock. TEVA is also below the 200 MA. So now I'm looking for the next stock after that. And I just keep going until I find one that's trading above the 200 MA. TIGR is also below the 200 MA. TME below the 200 MA. ISBC, that's the first one that's above the 200 MA and looks pretty decent. It's kind of coming out of nowhere. And go ahead and mark out the previous high. I need to see the price trading above the previous high, whether it be in the previous day or the aftermarket or the pre-market. I want to see the price break above that level. Then after a pullback and a first 1 minute candle makes a new high, that's where I get in. So now let's move on. I decided while I was waiting for that entry to, let me go through a few more stocks because there were so many green stocks on the screener. This is where, right, even already at this point, you could kind of argue, why am I doing that? I've already got a stock that meets my criteria. Is this FOMO? And that's what I'm going to kind of get to with this video beside these trades, is that no matter how good you are as far as your discipline or your trading plan, FOMO never goes away. It's just how your plan is structured and your ability to follow your plan that can kind of help you avoid the pitfalls of FOMO trading. And FOMO, if you're not familiar, means fear of missing out. That's my cat. He's got some FOMO right now. So here's what I'm talking about. So now I've got NYCB up on the charts, and it has a great looking pattern. And then if you look at ISBC, its pattern, not as good, in my opinion. This is another thing that I want to talk about today beside the FOMO thing. They kind of go hand in hand here, is adding some subjectivity to your trading once you've already been proven that you can trade purely objectively, right? So I think for a very long time when you're a new trader, first of all, when you're brand new, you're not going to be able to trade objectively. Simple as that. You're going to be doing all kinds of crazy things. Then once you kind of throttle back and realize, okay, doing all kinds of crazy things is never going to work, then you need to develop some sort of objective trading plan that tells you exactly what to do, exactly when to do it, and also tells you what not to do. And then you need to prove to yourself, after taking so many trades for so long, so many months, that you can trade objectively, purely objectively, without judgment. Even when you lose, you can still trade objectively. And I've been doing that for a very long time now. And what has been kind of creeping into my mind as I've been taking these test trades with this new market open strategy of mine, that maybe now that I have proven that I can trade objectively, maybe I should start adding some subjectivity back to my trading. What I mean by that is that if we look at these two patterns here, this one here and the NYCB, in my opinion, my subjective opinion, NYCB has better price action. Does that mean that NYCB has a better chance of giving me a 2-hour trade versus ISBC? That part I really can't tell you. I can only make an assumption based on the price action. I could tell you what happened today, and you're going to see that as these trades play out. But only after collecting enough data will you know, and it's kind of hard to do that. So what I would rather do is give myself the best odds, and I think what the best odds are is if I pick the better pattern, the better price action over the weaker pattern, that in time my win rate will improve. And that's the only thing that we're going to really be able to determine, because I'm not going to take 100 trades on the best textbook chart pattern that I see versus one that's not as good and then see what happens. I mean, that's kind of silly. So what I'm going to do is just continue to try and pick out of, if I have 2 stocks or more on my chart page, instead of taking 2 entries like I did here today, I'm just going to decide ahead of time which one looks better and just focus on that one and get rid of the other one. So I'll show you that as well as the video plays out. But let's go back a little bit here to the entries, and you can see what happened, what triggered my entry. So NYCB was running up really strong. It didn't give much of a pullback, but it did give a pullback on one single candle, and that is enough for me, according to my plan. If a stock kind of runs straight up, the very first pullback that it gives, I want to get in. So that's what I'm doing here, is after I see a red candle, then I look for the break of the high of that candle. Obviously, I'd prefer, another red candle or maybe 3, a little bit more of a retracement, but that doesn't always happen, especially when there's a lot of energy, a lot of buying into the stock. Then you only get one chance, to get in. And that's kind of what this strategy, I guess, is about. Getting in after the very first pullback. So the high of this candle is 1173. I want to see 1174 or better, and then I get in. And then on ISBC, I'm watching both of these at the same time. You could see it's given a nice 3 candle pullback at this point. So as soon as a 1-minute candle makes a new high there, I'm also triggered to take an entry. So you can see my cursor move. I'm checking out both of them. So here comes the break of this red candle. Let me just fast forward a little bit. Okay, here it is. Let me back it up. So we see there, it actually happens on the subsequent candle. So right as the next 1-minute candle changes, it breaks the high, basically, of both of those candles. So this one's kind of a weird trade as well, because ideally, it would happen all in one candle, but it kind of happens as the next candle's forming. So I kind of just added those 2 candles together and treated that as one single 1-minute candle, and placed my stop loss, I think, at the low of this red candle. So the low of that red candle is 1166, so I go up to 1165 with my stop loss. So that gives me a 10-cent risk. So twice my risk would be 20 cents, and that's where I'll move my target. Now, let's look at the ISBC entry. So NYCB was obviously the first trade, which we know has the lowest probability of working out. I want to talk about that a little bit too. And then you can see as I got into this NYCB trade, ISBC did trigger my entry, and I missed it. And this is kind of where like the FOMO thing comes in. Now I've got a trade going. Once I set my stop loss, and I know I'm safe on this trade, like I can't lose any more than I want to on this trade, I look up here at ISBC and I see this big green candle forming, and I think, wow, that looks really good. I just missed my entry on that. Maybe I can get in, where I would have. And I trigger, because now the price is right down near where I would enter at 1403. I just get filled at 1405, which is a little bit of slippage, but 2 cents on a $14 stock is nothing. So I get in there and I move my stop loss up, and you can see the candle just starts to engulf again, and it looks really good. But I know, that I kind of got suckered into that entry based on this candle. I'm already in this trade. I mean, there's nothing in my plan at this moment that keeps me from doing this. So it's not like I broke my plan or broke a rule or anything. But I know that the more ticker symbols that I put trades into, the less chance I have of winning my trades, because my second trade has a higher probability of my first of winning, and then my third even more so. So that's what I mean by that. If I put in 3 separate trades into 3 separate tickers, then I'm working with the probability of my first trade working out, which is pretty low. So I don't want to do that, and that's kind of what I'm getting to here with adding some subjectivity to my trading, where I just decide which stock has the better price action, the better setup, stick with that one, take 3 trades on it if I have to, and whatever the outcome of those 3 trades, it is what it is. If I lose all 3 trades, at least I tried to give myself some edge, an additional edge based on price action. So you're going to see here in just a moment. Now, I'm just putting that yellow line in place really for the purposes of this video. I knew that I was already trading above the previous high, but I just want to show you guys where it is. And now here I'm just checking my calculations on the 2-hour calculator that I've placed my profit target in the correct place. So you can see here I get stopped out on ISBC. Not that big a deal because, you know, I'm using my stop loss and all that. But again, I didn't really need to take this trade. I was already in this trade. This trade had the better price action. There was nothing against my plan that says I couldn't take that trade, but now there is. And I'm going to show you what I added to my plan to kind of keep me out of something like that in the future. It's kind of the point of this video, not just going over these trades. But so here's where I decide to, let me just focus on the one that I'm trading, NYCB. And of course, I just like to keep the SPY, the NASDAQ, and my swing trade up in view. So I go ahead and get rid of ISBC. I'm no longer interested in that one, because once that trade failed, I just decided, instead of continuing to trade that one, let me stick with the one that I thought had the better price action to begin with. And if it fails, then I can use my last trade on that one, trying to get kind of break even, I guess, on the day. So let's fast forward. This is me. I was just opening up my plan because I wanted to remind myself to make an addition to the plan after what happened today. All right, so about to get hit here on my profit target. There we go, 11.95. So even after that pullback, I don't worry about the pullback. I just let the trade play out. So this is a great example of why I get in after the very first pullback on this red candles, because sometimes these things are so strong, they just give you kind of a little resting candle on the way up, and they're going to continue further. They give you a little pullback and you get in. Now there is another 2-hour trade over here, but if I can, I'd rather get into the earlier one where I have kind of a lower risk, or at least a lower price. Actually, this one was higher risk and higher reward as well because of the size of this candle versus the size of this candle. So it ended up being a better trade than if I would have waited, but there's nothing in my plan to make me wait till here. So that's that. That's the end of that trade. Now let me go over what I wrote in my plan, and then we'll look at the spreadsheet. So here, after what happened today, and what I've been thinking about, adding that subjectivity, I wrote this in the plan. If you have multiple stocks on your chart page that are about to trigger entries, pick the one that has the best looking setup and pattern and stick to it. Otherwise, you're wasting your highest win rate trade, which is trade number 3. Even if you get stopped out on all 3 trades, at least you tried to give yourself an edge based on cleaner price action. So what does all that mean? If you look at the win rate of my first trade, my second trade, and my third trade, you can see that they improve as you go through those trades. So since I took 2 trades right at the beginning on 2 separate stocks, now my final trade would really probably have the win rate of the second trade instead of the third trade. And that's something I also want to talk about really quickly, is I need to go over this data and kind of reevaluate the win rate on each trade, because right now I'm just looking at which one I took first versus second and third, which is valuable data. But what this is really getting at is, what is the likelihood of subsequent trades working out on the same ticker symbol? So let's say the ticker symbol gives me a good pattern and entry, all my criteria are met. I take the first trade, it fails. What's the likelihood of my second trade working out on that same ticker symbol, and the third trade working out on that same ticker symbol, assuming the ABCD pattern hasn't failed? So that's what I'm going to look at very soon, and I'm going to be putting that data over here, and we'll be able to do some comparison there. So So here's my trades from today. Today's the 28th. There was no trades for me to take yesterday, and then Monday I just wasn't around to trade. So here's the NYCB trade, and here's the ISBC trade. So we're walking away with a 50% win rate today, and 33% is break even. So that's a profitable day, but it could have been a 100% win rate if I used that subjectivity and said, you know what, let me just stick with the stock that has the best chart pattern and best setup and leave the other one, even though that other one did meet all the criteria to take an entry. So now our win rate, the average of each trade day is right here. I'm going to go over all of these in detail at the end of the week. I just went over these in a video, I think on Monday. So I think you guys are probably pretty familiar with this stuff by now. But anyway, if you have any questions about this trading plan, about the results so far, now we've done 50 trades, so we're halfway done. We want to take 100 trades before we increase our position size. So this is a nice little place to be. And I think that's pretty much everything. Again, if you have any questions, let me know in the comment section below. Whenever you take a trade, make sure that you have a plan and you stick to it no matter what. Always take your stop losses, honor your profit target, and in the long run, you should be green. Take care.